Hello and good morning in Europe, good evening in United States. This is Ahura with another daily outlook video. As you know, in this series of videos, we're looking at the market, seeing what happened, what is happening, and what we have to expect from today's tradings and stuff like that. So let's go see in the market what's going on in the market. As we know, last week ended with the NFP data, non-farm payrolls. This kind of missed the market expectations with 200 some thousand of new job created in last month in November, while the market was waiting for more than 550 or 600,000 new jobs created. On the other hand, unemployment rate fell to 4.2%, much lower than 4.6% of last month and 4.5% of expectations. Household increased, mid increase, average income also increased. All this data together giving some kind of mixed outlook from the market. However, this mixed outlook shows that in overall, in general, labor market is doing fine. Stock market should be worried about the rate hike in the next year because with this data, economic outlook is fine. Right now, the labor market also saying showing that the data showing that it's not something bad. We have 4.2% unemployment rate. We have household increasing. People they have money to spend. Retail sales also increasing. Average income increase. So all this data together shows that we are waiting. We have to wait for this time that we needed to be to unemployment to reach the unemployment level. Most probably we will reach that level much sooner than earlier expectations of Federal Reserve. Therefore, we can expect twice at least twice increasing interest rates at next year by 2022. The first most probably will be by mid of 2022 till June, July, and the second one most probably will be in November or before December. This is at least twice we will have that this two time we will have increasing the interest rates in 2022. This is the at least and post and if the economic data will be as good as it was in the last month, we can see more rate hikes in the next year. On the other side, the Omicron variant of the coronavirus shows nothing to be for till now, so it shows nothing to be more worried than Delta variant because, as we know, it's increasing. Is the spread of the speed of the spread of this variant is like kind of 10 times more than Delta, but data shows that there is nothing being more dangerous. There is no sign that it is more dangerous than the Delta or other variants of coronavirus. So, therefore, this is the risk, market risk, as you see, that there isn't. The market risk is full on Friday. USD index, but still, as the economic data is good, and we are going to see another rate hikes, tightening policy next year. Therefore, the US dollar again, US dollar index, as you see again, is strong, and as it was expected last year, it will continue its way forward. On the gold, rate hikes with the good, better than economic data. There are two again. There are two opposite data for the gold rate hike, faster rate hikes. And good, I mean, good data, and faster rate hikes means that the US dollar will be a little bit more stronger, so gold should be under pressure. On the other side, faster rate hikes mean a little bit more pressure on the stock market, so therefore demand for gold will be increased. That's the that's the same reasons that we have in the past months. That's you look at here. Look, if you look at the chart, you can see these are exactly same. These are exactly same situation that we have over like kind of from uh, last I can say this 5 6 months. So this is 5 or 6 months that we are still in the same situation. Sometimes it's going lower, sometimes it goes higher, but still we are around same level of 1780 90 1800, so around 1800 to $20 less or more. We are moving from year until year, and also situation is same as long as we have something to that can change the situation. But still, for gold, still we have the mixed outlook. About the oil market, I have to mention that Iran nuclear deal with the Western countries, negotiations didn't went good, so the market is market is not expecting to see the Iranian oil in the market as soon as possible in next month. Therefore, less output will be in the market. So the market, that was one of the reasons that the market increased. So they cannot count on Iranian oil to be in the market anytime soon. Therefore, this was one of the reasons that the oil price increased. On the other hand, Saudi Arabia also increased its price of oil for its customers. So oil market for these two reasons is still high. The stock market will be, well, yeah, this bit they just kind of, if you see the futures, this the futures, so make it zoom in. This is the futures market. As you see, the SP 500, Nasdaq, and Dow Jones, all of them, they either covered some part of Friday lose, or as the Dow Jones did, they recovered most part of that, but still, in overall outlook, still we are in a downtrend as it is at since, as I told, the data shows that the economy is doing fine, and in the short term, still we have to see the indices in a little bit under pressure. For today, recoveries happen. I don't see that we have that much positive data to see that increasing a little bit higher. Will be a little bit more under pressure, the stock markets for today as well. About the Asian markets, let me say something about the Asian market. In Evergrande again lost 11% early morning in its data, as it says the company's official says that there is no guarantee that we can pay all our debts. So still, the developer companies a little bit are under pressure in China, and it puts more pressure on Chinese and Asian market in general. About the cryptocurrency market, as I was telling you in the past weeks over and over, that be careful about the market. Market has has no sign of uptrend, has no sign of increasing. Therefore, please be careful about the market and take care about that. Still, cryptocurrencies market still have a higher risk to downside, because we are waiting to see the Tether report to the Senate. We have to see what do they do, how is their plan for the tethers that they published already, they put in the market, out in the market, and do they have any guarantee for their background or stuff like that. So stable coins are still the main risk in the cryptocurrencies market, so be careful technically, fundamentally, from all that. Still we have to we can see the cryptocurrencies market under pressure. About the euro still again under pressure. US dollar is stronger. This is what I told last week, that euro USD is still in a clear downtrend, especially as long as it is trading under 1.1325. We don't have any data that can show that it can be changed right now, but still the downtrend also is not that much powerful with the RSI above 40. GBP USD same, but GBP USD downtrend is more stronger. Still we can sorry. Still we can count on more downtrend for GBP USD and USD JPY for the last certainly the USD JPY higher or increasing US dollar changing can put more pressure on yen, but still yen also is not going to be that much weak at the moment. These things just we have another thing. If you see interest, yes, 10 years bond yields, you can see this rates last week. You saw the rates fell to all the way down to 1.42, 42, 43, and down I can see that 1.39 at the last uh, last hours of the market. So these data all telling us together that we can see a little bit US dollar a little bit more stronger. So Euro USD, GBP USD should be under pressure, and USD GBP a little bit around same level and a little bit higher. This overall the market about the rates, I can tell you something. Rates they fell last week, but with the data, with the increasing expectation of from the central banks to increase their rates, with increasing expectations for rate hikes, most probably we will see increasing 10 years and 30 years bond yields as well, and it must put more pressure on yen. So if in next days we see that US 10 years and 15 years and 10 years and 20 and 30 years bond yields increasing from 1.39 of 10 years that right now we can see, if it increased to 1.40, 45, 50, we can see USD JPY in a higher numbers as yen will be under pressure. This is for next days. Generally, this is the market situation. Hope it was useful for you. Please leave your idea in the comments and let me know what you think about these videos, what you want me to cover more and think and talk about. Thank you so much. Have a good day and take care about your trades. Bye bye.